What does the recent Bitcoin price action signal in terms of sentiment towards the Bitcoin and the altcoin spaces? We're here to break this down with Benjamin Cowen. He is the founder of Into the Cryptoverse. Welcome back, Benjamin. Always good to see you.
Good to see you too, David.
Into the Cryptoverse is a very thorough analytics dashboard that we'll talk about throughout this interview. Benjamin also has a fantastic YouTube channel that everyone should check out. We'll put a link down in the description below. And you've been talking a lot about the Bitcoin dominance, especially recently since it's gone up by 51%. Let's start with that topic. When you're seeing that kind of percentage, what's your first impression? Is that a signal for bullish action, or is that a signal for correction? For Bitcoin, at least.
I mean, so normally when the dominance breaks the range high, like it has right now, can you see my screen right now?
Yes.
Yeah, so normally when it breaks the range high, it signals that a correction is on the horizon. It doesn't have to happen immediately, but if you were to look at just this 49% level, so if we just grab this wick right here, breaking this 49% level was a very important level for the Bitcoin dominance to break. And the reason that's the case is because normally when the dominance sort of breaks the range high, that signifies near the end of the Bitcoin USD rally. If you were to overlay the price of Bitcoin USD on the dominance chart, you'll often find that it's where the dominance breaks the range high that can often mark sort of the top, or at least near the top of that rally. It happened in 2018, and it also, of course, happened in 2019 as well. You can see there was a range high back over here. Once we broke it in June of 2019 at around 62%, that also more or less marked the top of that rally in 2019 as well. So I do think there's a case to be made that the liquidity from the altcoin market, it's been fueling this rally by Bitcoin for the better part of half a year. But at some point, there's just not going to be sufficient liquidity from the altcoin market to continue to sustain the price of Bitcoin. That's not to say that Bitcoin can't go up anymore. It could. It's just that at some point, I think during the pre-halving year, we will reach a point where there's just no longer sufficient liquidity from the altcoin market to sustain the valuation of Bitcoin USD. And the reason why that's important is because the dominance rallies can go, the dominance can rally whether Bitcoin goes up or down. And there's actually an interesting thing that happened over here in 2018. The dominance rally started at 39% and it went to 62%. But it was around that 51 to 52% level that marked the inflection point on Bitcoin USD. So we went from 39 to 52 or so on a rally, but the dominance continued to go up even when the Bitcoin price actually saw about a 25% correction. So a 25% correction today would get Bitcoin back to around $23,000 or so. And I mean, that might not sound like a lot, but if something like that were to happen, it would be quite detrimental to the altcoin market. And you'll find the similarities to today as well. I mean, the dominance rally started at 39%. And has gone up to about that 51, 52% level. And as far as I can tell, there's plenty of momentum for the dominance to continue closer to that 60% threshold.
We have to put this dominance into historical perspective, and I don't want to make my own assumption, so I'll just ask you directly, why is it that the dominance, even though it's been going up, is still low by pre-2017 standards?
Yeah, I mean, I think this initial phase over here is just sort of the initial capitalization of the altcoin market. I mean, altcoins barely, were just then coming into existence. But the interesting thing, though, that I find is, I think that's sort of the knee-jerk reaction. Like, why is dominance so low? There's a couple reasons for that. One is there's just been a lot more liquidity in, this time around, courtesy of the Federal Reserve printing $6 trillion. So, I mean, I think that's one reason. But another reason is actually the stablecoin market. So the stablecoin market cap is about 100, just over 100 billion, maybe about 115 billion, which represents approximately 10% of the overall cryptocurrency market capitalization. If you were to go over and look at the dominance, excluding stablecoins, which is what this chart is showing, you can see that the dominance is already above 56%. So there's a big difference between the dominance including stablecoins and the dominance excluding stablecoins. So when you look at it like this, you can also see that it recently broke its range high from 2022 and is, at levels that really we haven't seen since April of 2021.
Interesting. And we have to again put things into historical perspective. So you're right. There was a time when Bitcoin was one of the few coins out there, and then the rush of altcoins came in. This time, people are saying that with the advent of regulations cracking down on things that are securities, quote unquote, we could see a complete wipeout of anything that's not a significant coin. So basically, a washout of the altcoin market. Do you subscribe to this theory?
Not really. I mean, I think that the SEC stuff is more or less the narrative that will go along with the price action. But I think the more important aspect of it is it's more so a function of just lower liquidity. And I mean, when you have a lot of liquidity pumped into the markets back in 2020, the higher risk stuff like the cryptocurrency market, the altcoin market, that can go up quite quickly. When you take that away, that market is one of the first markets to get hit. So of course the narrative will be that it's a black swan related to the SEC. But my argument has been, for over a year now, that as liquidity dries up, the altcoin market will lose valuation not only on their USD pairs but also their Bitcoin pairs. I do think there will be some cryptocurrencies that will survive whatever the SEC does. Also, too, David, we have to remember that every cycle, even last cycle when the SEC wasn't even that interested, we still saw thousands of altcoins die out, and it was more so not because of the SEC. It was just because they provided little to no value. And market participants just got interested in the next cycle or the next class of cryptocurrencies in the next cycle. So I think that's something we have to remember. The one thing I've said before is that every cycle, especially with the altcoin market, we always reach the point where people legitimately think it's dead, and I think a lot of people pretended to think that the altcoin market was dead back in December. But now that the SEC is coming after a lot of these altcoins, now a lot of people are actually getting worried, right? Now they're really starting to think, all right, well, maybe it is that. And that's a pretty common place to find ourselves in the market cycle.
Well, one thing that's interesting is to examine the industry response to these SEC crackdowns. So a very, very practical, real response is exchanges delisting altcoins, Robinhood delisting Polygon, Solana, Cardano, so on and so forth. That has a very real impact on not just price, but also perception. And so whether or not this trend is going to continue is up for debate. But what do you think that's going to do with the price?
Yeah, I mean, it's not good for liquidity. I mean, when you have high risk assets like cryptocurrencies, liquidity is everything. You need liquidity to attract large players to the space. If you don't have liquidity, it's going to, if you have very thin order books, there's a lot of larger institutions are not going to want to come to the table. So certainly in the short term, it's trending in the wrong direction, though it's that exact fear that a lot of people are starting to fall into now that will likely cause them to be the capitulation candle in the altcoin market. And that's normally when you want to come in and scoop a lot of the altcoins up. I don't think we're there yet, to be clear. I still think that we have a ways to go, mainly because I think that the dominance needs to continue this rally for at least a few more months. But maybe by the end of the year or so, the altcoin market will have we'll have gone through a lot of the fear and a lot of these delistings that we're seeing, and then by that point, hopefully we can start to turn things back around.
We have to talk about the Bitcoin spot ETFs. Certainly, it's been a big piece of news for the Bitcoin market. Fidelity just jumped on the bandwagon following BlackRock. Do you think this actually has any significant price impact whatsoever?
Not really. I mean, the narratives are always there to support the price, right? So
Sure, yeah.
I've always said before, right? Like the narrative, so price does not follow narrative. The narrative will always follow the price. So, if large institutions are interested in Bitcoin, they would have been buying 6 months ago. It's not like they're just now coming in to buy or at least showing any interest, right? So I think that that's a narrative that a lot of people might fall into. I think the real narrative is more so just it's a rotation of capital from the altcoin market to Bitcoin, and that's more or less where we are now. Whether they get approved or not is a different story. And I mean, I think long term, right? Long term, certainly having ETFs by these institutions would be long term bullish for Bitcoin. At least I would think that it would be. But in the short term, I don't really think it matters at all.
Mm-hmm. Well, let's talk about the price itself then. The Bitcoin price has hovered around $30,000 for almost a week now. Barring last week, this is the first time that it's traded above $30,000 since last summer. So it's been a pretty significant move. Is this resistance level a significant psychological level, Ben?
I mean, so we've gone to around 31,400, I believe, something like that. When we started this year, my high-end target for and not even to say that we're going to get there, but I thought that the highest it would go really this year would be around $35,000. And it was a very dubious way that I came to that number. It was basically just looking at the time weighted average or sorry, let me fix that. So I was looking at just the average of 2015 and 2019 year-to-date ROI, and sort of just overlaying where we are. And if you actually look at the light blue line, this is the 2023 year-to-date ROI. And then the dark blue line is the average of 2015 and 2019. So you can see it's actually playing out fairly close to what we normally see in pre-halving years. My general guess is that Bitcoin will go through, whether it could already be going through it, right? Some type of a topping process where the rally gets faded in the second half of the year, not necessarily to immediately new lows. I mean, normally when you look at pre-halving years like 2015 and 2019, we tend to end the year up positive. And in fact, both of these years, if we're right in sort of in between them now, if you look at the final year-to-date ROI that they achieved. Normally, what I would say though is that in the pre-halving year, we spend about half the year going up and half the year going down, and we are getting pretty close to the point where we've spent about half the year going up, right? I mean, we're now looking at about 5 months. The first out of the first 6 months of the year, 5 of them have been green. In 2019, out of the first 6 months of the year, 5 of them were green as well. And in 2015, you'll also find about half green, half red. So my guess is that, in the short term, it's really hard to say if Bitcoin can push a little bit higher. Again, my high-end target would be 35K if it can make it there. But I'll tell you this, David, if Bitcoin goes to 35, it's not good for the altcoin market, because the altcoin market will likely just continue to get wrecked on their Bitcoin pairs. And then at some point, Bitcoin, would need to come back down. I think it would have to retrace some of this move like it normally does in the pre-halving year. And then at that point, the altcoin market goes down quite a bit more, and the dominance continues to go up. So, I mean, in the short term, it's nice to at least see that Bitcoin held the line here. But again, the reason why I think this is not new money coming into the space is because if you were to switch this over to, say, the altcoin market, Total 3, which again is everything besides Bitcoin and Ethereum, you can see that it's actually below its 20-week SMA, right? So there's a very big difference between what was going on in 2020 when Total 3 was trending up with Bitcoin and what's going on today where Total 3 is trending down while Bitcoin is putting in new yearly highs. And you can actually draw the same conclusion from the last pre-halving year as well. Look at this. Total 3, the altcoin market, dropped below its 20-week SMA back in July of 2019. Whereas Bitcoin did not drop below its 20-week SMA until September, right? So Bitcoin was able to hold up here for about 2.5 months longer than the altcoin market was able to. So Total 3 told us 2.5 months before Bitcoin did that it was actually, the market was getting weak, right? But it took Bitcoin an extra 2.5 months to fall back down. And I think that was just because all that liquidity was getting absorbed by Bitcoin from the altcoin market. I still think we're in that phase right now. And it's really hard for me to know exactly where the turning point is, whether it's at 31K, whether it's at 32K, 33K. I don't know exactly, but I don't really see new highs this year.
You made a crucial point just now. If Bitcoin goes to 35K, the altcoins get wrecked. Now, 2 years ago, if we had this conversation, a lot of people, I did have this conversation with a lot of people 2 years ago during the actual bull rally, and the conversation was centered around the fact that if Bitcoin goes up, the altcoins would follow with a higher beta. But now it's the reverse. What changed in the narrative?
It's a great question. Retail interest. I track something called the social risk. So this here is showing a lot of different crypto YouTube channels, and it's showing new YouTube views to those crypto YouTube channels, including my own. And back then, we were seeing people come into the space, right? So you could kind of project that there would be a marginal buyer for your altcoins a few months from now because the general trend in social sentiment was up. But recently, the general trend in social sentiment has been down. take a look at this chart. So let me actually show you really quick the social risk. So the social risk tracks that chart I just showed you. It also tracks new YouTube subscribers. It also tracks a lot of things going on Twitter. And we normalize it between 0 and 1. And you can see here that the social risk continues to go down, right? So people are leaving the space, right? They're not entering the space. So it's like, again, back in 2020, when Bitcoin was going up, I was quite bullish on the altcoin market, and I was actually bearish on the Bitcoin dominance because I could see people coming in, right? I could see people subscribing to my channel. I could see, just an influx of new retail participants. Today, I don't see that at all. I see people leaving. I see people having no interest in this anymore. And you can see where we are in terms of the social risk. It's at 0.176. Now, what's interesting, if you overlay the social risk here, which is the orange line, over the Bitcoin dominance, which is the green line, you can see that as the social risk goes into the lower risk bands, the dominance tends to go up, right? And that's exactly what we're seeing today as well. So that's the main difference. There's not the macro, more so back then, supported people coming into the space and taking on risk because they had all this excess liquidity. Today, that liquidity is basically drying up. And so people are basically just seeking the relative safety of Bitcoin over the altcoin market. It's the relative safety. It's not to say that Bitcoin can't fall. It's just that it's relatively safer than the altcoin market, and liquidity is drying up, which is why I don't see it playing out the same way that it did in 2020.
That's a very interesting perspective, Ben. We mustn't forget also that Bitcoin troughed at around $16,000 back in November of last year. That's an almost doubling of price almost since November. Someone drove up the price, Ben. If not for the retailers who are leaving, who was driving up the price?
Well, I mean, I think a lot of it is again a rotation of capital. If you were to look at this chart right here, this is a coin market cap on April 16th of 2023. Look at the price of Bitcoin. The same price as it is today, right? I mean, you can look at Bitcoin, it's at 30,200. Here it is, 30,300. But look at where Ethereum was. It was at 2,100. Look at where Cardano was, 45 cents. Doge was at 9 cents. Polygon was at 118. Solana, $25. Where are all those altcoins today, right? They're much lower than that. I mean, we can just take a quick look. You can go look at ADA's at 27 cents. Polkadot's less than $5. Avalanche is at $12. Solana's at $16. And Matic is at 62 cents. So a lot of it, in my opinion, has been a rotation of capital, right? It's just been a rotation from higher risk plays to lower risk plays. And you can also visualize it this way. I track the total market cap. We've mostly been going sideways, right? The total market cap with some deviations by a couple $100 billion here or there. It's been mostly going sideways for, 8 months now. Why is that? It's because it's just a rotation of capital from high risk to low risk. And to me, it doesn't really represent a lot of new. I'm not saying that no new money is coming in, right? I mean, I'm sure some new money is coming, especially the diehard crypto fanatics that just DCA money in, like that's still probably coming in. But I don't think you're seeing an influx of a lot of new retail participants. And I think that's quite easily visualized by just looking at things like new YouTube views, or just look at new YouTube subscribers to these crypto YouTube channels, right? It is basically non-existent right now. So again, I think it's a rotation of capital more than anything else.
I have another explanation for that chart. This is because I'm also in media. People generally avoid channels like ours, the financial news, because when bull markets are, when the animal spirits are rising, everyone wants to see good news, and people want to stay away from bad news when markets are down. So yeah, I think that's another explanation, but you're absolutely right. Let's take a look at Ethereum. Now, Ethereum has gone up along with Bitcoin. It's one of the alts that actually rose. So clearly capital has been rotating into Ethereum as well. Could you make the argument that Ethereum is not like the other alts and will likely actually prosper if Bitcoin goes up more?
So I think you can definitely make the case that Ethereum is in a different class than the altcoin market. So I think there's Bitcoin and Ethereum are the blue chips. But I do think Bitcoin is relatively safer than Ethereum. Actually, if you look at a lot of alt ether pairs, you will find that a lot of them are bleeding, right? So a lot of altcoins just bleed against Ethereum over the macro scale. But we're also seeing Ethereum bleed back to Bitcoin. So I do think that Ethereum is safer than the altcoin market, but I also think Bitcoin's safer than ETH. And really, if you look at the Ethereum Bitcoin valuation, this is just a series of lower highs. Each of these rallies by the Ether Bitcoin valuation has just been a series of lower highs. And my general speculation, if you sort of zoom out here and look at this as monthly candles, we can even switch this over to say like Heikin-Ashi monthly candles. My general speculation is that we're in a phase where it's actually in the process of collapsing, actually. So you kind of have your initial move up, like we had back here in 2016, same thing in 2020. Then you get your first distribution up here, and then your second one right here. I think we're looking at that play out once again, and I'm guessing that we're going to see the collapse of the Ethereum. I mean, I've been saying this for a long time, right? But I do think we are witnessing at least the collapse of the Ethereum Bitcoin valuation, and I expect it to go to that 0.03 to 0.04 range. What's interesting is if you look at what happened last cycle, the Ethereum Bitcoin valuation sort of fell down to about 0.02, and then about a year later, it revisited that range, right? And these are monthly candles, so you can see about 12 months later, right? It revisited that low, and I'm arguing that this low here that was back in June of last year, we're about at that window where we're probably going to retest that level at about 0.05. You could see some type of a bounce from that level, but I ultimately expect it to resolve to that 0.03 to 0.04 level, and perhaps that will mark the end of the Bitcoin dominance rally.
Going back to the alts for a minute, given the divergence of Bitcoin and the alts, could you not make the argument, Ben, that just on a pure valuation basis, the risk return profile favors the alts right now?
No, I don't think so. If you look at say total three, I mean that's a great question, because at some point I think you make the case that is true, right? At some point, because the altcoin market will have just been bled so much that it's like, well, how much further can it go? But here's a great chart to really visualize that. This is the altcoin market divided by the Bitcoin market cap. And I would argue that the altcoin market collectively is an oscillator at best against Bitcoin. And I think it's in the process of bleeding back down to this range over here. So it's currently at around 0.55. Normally we go all the way back down to about 0.2, 0.3. So I still would argue that that you really could see this drop another 40% or so. And at that point, you might actually start to make that case that altcoins are worth the risk. The hard thing is if you look at things like the ADA Bitcoin valuation, exactly 4 years ago, it was at the same valuation that it is today. This is June of 2019, same valuation as today. 6 weeks later, it had dropped another 50% on its Bitcoin pair, only 6 weeks later. So it's really hard to know exactly when to come in. But I do think that just by looking at things like the altcoin market divided by the Bitcoin market cap, I think it really does show that the altcoin market still does remain a lot higher risk at the current time.
Mm-hmm. Can we take a look at your portfolio optimization dashboard and what it's recommending currently?
So if you look at modern portfolio theory with Bitcoin and ETH, the portfolio which currently maximizes your Sharpe ratio is about 71% Bitcoin, 29% ETH. The one that maximizes your Sortino ratio, which does not punish positive volatility, is 76% Bitcoin and 24% ETH. And if you want to minimize volatility completely, it's 93% Bitcoin, 7% ETH. I think we're in the process. Like if you were to ask me what this would look like 6 months from now, I think it'll be an even higher percentage Bitcoin than it is today. But by that point, it'll probably be we'll likely be reaching the point where it could be time to actually rotate into the altcoin market. And if you add an altcoin onto this, let's add Litecoin and recalculate this and calculate out the efficient frontier. What does it show? It shows that 0% Litecoin for both the maximizing your Sharpe ratio and your Sortino ratio. You can add some other ones in there as well, but more or less, like you could add XRP, Litecoin, and Monero and recalculate this for all 5 of them. But in general, what I believe you're going to find, is that you can see it's really small portfolio allocations for these altcoins, mainly because it's not that they can't give you returns. It's just that they tend to bleed against Bitcoin, and they also tend to bleed against Ethereum. This is David. This goes for the macro scale. It's not even just today. I mean, look at the Litecoin Ether valuation, right? It's a macro bleeder more or less. It doesn't mean that it doesn't occasionally pop up. And look at say like the Litecoin Bitcoin valuation. You're gonna basically find the same stuff, right? It's just a macro bleeder. So it's not that they can't go up in bull markets. It's just that they tend to bleed against Bitcoin, and they tend to bleed against Ethereum.
Okay. Finally, let's close off on the macro. We can't ignore that. Do you still think that the overall macro environment with equities and the risk assets overall play a significant impact or a factor on the price outlook?
For Bitcoin?
Yes, for Bitcoin.
I mean, it's really hard to predict exactly the way the macro is going to go. If you look at, and if you mentioned like equities as well.
Well, it isn't so much of a projection question, it's so much of an impact question, whether or not Bitcoin is still driven by the overall macro as much as it was maybe a couple months ago, rather than just micro news related to Bitcoin and crypto.
Yeah, I mean, I think it is somewhat related to the macro, of course, but the macro takes place over years, so it's not always obvious, like, as to what event specifically is triggering another event. I also think that Bitcoin operates in a very cyclical manner as well, sort of outside of some other things. I'm not saying it's not affected by macro. In fact, I do think that at some point we're gonna see, the uninversion of the yield curve. We're gonna see the unemployment rate go up. My guess is maybe like early next year, if it hasn't happened by the end of this year. And at that point, just like 2020, I imagine that risk assets would get hit. I mean, Bitcoin was not immune to what happened back in March of 2020. It wasn't immune to that. It also wasn't immune to the collapse of the stock market back in late 2018. We've seen risk assets in general, like crypto, do poorly when the overall market does poorly, or when the macro conditions start to worsen. I think recently, though, the resiliency of the U.S. economy has basically allowed risk assets to stay elevated for quite a long period of time, a lot longer than I think a lot of people were thinking they were going to.
No, absolutely. I think a lot of people do agree with you. You do excellent analysis, Ben. Where can we follow your work and learn more from your dashboards?
Yeah, so I mean, feel free to follow me on YouTube at my channel is just Benjamin Cowen. I also have Twitter at Into Cryptoverse, and then I have my website, intothecryptoverse.com.
Excellent. All right. Thank you very much, and appreciate your time as always. We'll put the links down in the description below. Check out Benjamin's work, and we'll follow up again next time. Thank you, Benjamin.
Thanks, David. Pleasure to be here.
And pleasure to host you. And thank you for watching. Don't forget to subscribe.